Hey traders, it's Bullish Bob here. Welcome back to the channel where we break down day trading into simple, actionable lessons that can level up your strategy and sharpen your edge in the market. Today, we're diving into a topic that every trader needs to understand: bag holding. If you've ever caught yourself saying, "it'll bounce back," or found yourself staring at a red position, frozen, hoping for a miracle, this one's for you. We're going to talk about what it means to be a bag holder, why it's one of the biggest traps new traders fall into, and most importantly, how to avoid it altogether. This video could save your account, or at least save you from repeating costly mistakes. So whether you're brand new to trading or you've been around the block, stick with me. We're going to break this down step by step, no fluff, just real talk and clear examples. Let's jump in. When we talk about bag holders in the trading world, we're not being cute. We're talking about one of the most common and costly mistakes that newer traders make. A bag holder is someone who buys a stock with the intent to sell it for a profit. But when the trade goes against them, instead of cutting the loss and moving on, they hold it and keep holding. At first, it might just be a small pullback, but instead of honoring a stop loss or reassessing the setup, the trader freezes. Maybe they tell themselves it'll bounce back, or I'll just hold it overnight and wait for news. But as the price continues to drop, what was once a day trade turns into a bad swing trade and then into a losing investment. That's bag holding. It's when a trader refuses to cut a losing position, hoping it will recover, and ends up holding a heavy red position, stuck and unsure what to do next. This chapter isn't about judgment, it's about awareness. Every trader faces this temptation, but to grow, we need to recognize it early and avoid it completely. Bag holding isn't part of a strategy. It's the result of abandoning one. Let's break down why it happens and how you can stop it before it starts. Bag holding happens for a few key reasons, and it's crucial to understand them if we want to break the cycle before it even starts. First, it's the fear of loss. When a trade starts to go against us, it triggers a natural emotional reaction. Instead of taking the small, manageable loss, some traders freeze. They avoid the discomfort of closing the trade and tell themselves it'll bounce back. Second, there's hope-based decision-making. Rather than following a plan or strategy, a bag holder trades on hope. That's a dangerous shift because in trading, hope is not a strategy. Price action doesn't care what we want to happen. It just moves. Third, it's poor risk management. Many bag holders either don't use a stop loss or ignore it altogether. And once you're deep in the red, it becomes harder psychologically to close the trade. That's when a quick loss becomes a long-term headache. So, how do we avoid this? Set a stop loss before you enter the trade. Stick to your trading plan, no matter what. Detach emotionally from your trades. Remember, cash is a position. Exiting a bad trade frees up capital and helps focus for the next opportunity. The most successful traders cut losses early. Not because they love taking losses, but because they understand that one bad trade shouldn't ruin your week, your month, or your account. If you want to survive in this game long term, bag holding has to be off the table. Bag holding isn't about bad stocks. It's about bad mindset. It's the hope that it'll bounce back, the fear of realizing a loss, the denial that the trade is over. Successful traders feel those emotions too, but they've trained themselves to act through discipline, not emotion. The difference between a struggling trader and a successful one isn't just about picking the right stocks. It's about how they manage their losing trades. Every successful day trader knows one thing: cutting losses quickly is key to long-term survival. Let's be clear. Successful traders still take losses, but what they don't do is let a small red trade snowball into a major account setback. They've developed systems, rules, and habits that help them protect their capital first and profit second. Here's how they do it. They use stop losses every single trade. Whether it's a dollar amount, percentage, or chart level, they define their risk before they enter. No exceptions. They already know what they're willing to lose on the trade, and if it hits, they're out. No second guessing. They never average down emotionally, adding to a losing position out of frustration or desperation. That's how bags get heavier. Pros only add to trades that are working, not ones that are falling apart. They stick to position sizing. Successful traders don't risk everything on one setup. They scale in based on conviction, volatility, and market conditions, not gut feelings or revenge trading. They separate emotion from execution. When a trade fails, they don't spiral. They reset. They stay calm, review what happened, and move forward with clarity. It's all about discipline. They treat trading like a business. And in business, you don't fall in love with a losing product. You cut it, learn from it, and move on. Managing risk isn't about being scared to trade. It's about staying in the game. The best traders understand that capital preservation is what allows you to catch the next big opportunity. They know one bad trade shouldn't cost you the next 10. So if you want to stop bag holding, start thinking like a pro. Protect your downside and let your upside take care of itself. Let's wrap it up and make sure everything we've covered really clicks. Bag holding isn't just a bad habit. It's one of the fastest ways to damage your account, your confidence, and your momentum as a trader. Let's go over the key takeaways from this lesson. A bag holder is someone who enters a trade intending to sell for a profit, but when the price goes against them, they hold, ignoring their stop loss and hoping for a bounce that often never comes. Why do traders bag hold? Fear, hope, lack of planning, and emotional attachment to the trade. These are psychological traps that every new trader must learn to overcome. How do successful traders avoid this? They cut losses quickly, manage risk like pros, use stop losses without question, and treat each trade as just one small step in a much larger journey. Remember, you don't need every trade to be a winner. You just need to protect your capital, stay disciplined, and avoid letting one bad trade control your outcome. This is how real consistency is built. If this video helped clarify things for you, make sure to check out the rest of our lessons and resources over at bullishboblive.com, where we break down trading into real-world strategies and keep education simple, clear, and practical. Thanks for watching, and as always, stay focused, trade smart, and keep growing.